Good morning, traders. It is Friday, July the 5th. Hopefully, everyone had a good holiday weekend yesterday if you're in the States. Anyways, let's jump into the charts. Hopefully, the video runs smoother this morning. I don't know why it was choppy. We did have a surge of traffic that previous morning, and it really bogged the server down. That could have been the issue. We'll find out today. If it persists again, then we'll end up hosting the videos off our server. But anyways, let's just jump into the charts here. Here's the SP 500, and if you see here on the daily chart up on the top right, we are tagging that 3,000 mark, new highs in the market, and it's actually getting overbought. And you can't see it on our indicator right now, features turned off, but more or less the market ran into an overbought territory, and the market is short term is going to be bearish at this point. So we are overbought. We do have a cycle high in the market, and we are back up into a level where we usually see short term peaks in the market. The last time we saw a price run up here on the 30-minute chart, we went from this oversold territory, these lime green cycle lows more or less in the market, to an overbought territory where it gapped up, and we had extreme overbought territory with the cycle moving down, and we saw this pull back. So overall, we're looking for a price to potentially fade back here. You can see our cycle over the next 2 or 3 sessions. We could see some sideways or lower prices in the SP 500 as it consolidates. Now, very similar type of price action. We had a run up and a gap into overbought. It faded down, and then we had another run up a few days later. We had a very similar setup like that over here in the market, where the market popped up with a big gap, it got overbought, it faded down a little bit, and then it rallied back up to get overbought, pulled back, and continued to hold up and faded lower for a few days. And that's right where we're looking again today, where it's done the same thing, a pop, a pullback, another pop, grind its way higher into overbought territory, and we might just easily fade our way back. Again, 3,000 is a whole number. There's going to be a lot of traders, investors saying, I'm going to get out if it gets to 3,000, sell my position. So we got to be aware, we could see some volatility here. The market may try to pop it and push it higher, but it might not hold and could end up reversing and putting in a pretty big sell day to put a downward bias in the market over the next session or so. Now, if we take a look over at gold, gold down 1.4%. I talked about it. I posted an article last night talking about short-term analysis, how gold looks primed and ready for a pullback. And you can see our more or less the cycle here showing a bit of a pullback in the market. And if you look at the daily chart here in pre-market, you can see gold is starting to tank pretty quick. And it's really just in the last couple of minutes. You can't quite see even the bottom, but obviously some news hit 8:30, economic data out, so gold pulling back real hard. This is why we wanted to take our partial profits up in this spike up here, is because it's not only a double top, it's resistance, and our momentum analysis said we needed to get out somewhere right up into this area to lock in profits, because the market, it's the first level the market has a chance to pull back and sell off. And if you don't take partial profits, move your stop up to our entry. This is where we got in on gold. We pulled some off up here. The market can easily take it away and turn a winner into a loser. And from the looks of it, we might get stopped out on our gold trade this morning. We locked in a gain up at resistance. And for all we know, this is going to continue to consolidate in this channel, or potentially all the way down. This is what I've been telling you for the last more or less week and a half, 2 weeks, that we got to be aware that everyone's excited about this taking off, and typically it's going to do the opposite when everyone is bullish. So we're looking for a more significant pullback in the market. Now, I just flipped to the GLD ETF, showing just working on regular trading hours. The focus here is looking at, this is the same as gold, it just is an ETF that mimics it. This is the cycle that we're looking for in gold. We got in down here, we rode GLD up, and you can see the downward bias over the next few sessions, and it's starting to happen today. Now keep in mind, this analysis only runs during regular trading hours. The last chart I showed you of gold was futures, but I try to focus with positions during regular trading hours, because that's when the majority of volume is traded. That's when the muscle is in the market. So just looking at it, you can see the bias for gold the next 1, 2, 3 days could be to the downside, and bring it back down to the lower end of the range going forward here. Now let's jump over to crude real quick. Crude is pulling back. It got to a short-term support level, looked like it was ready to bounce. In fact, it did get into an oversold territory um, the other day, and you can see it's putting in this little triple bottom. We'll see if it has a washout low. It needs to hold above $55 a barrel, which is this blue line on the daily chart over here on the right. It needs to hold there. Obviously, it's had a drop. It's got a little bit of a bear flag forming here at the 5-day. We could see another drop and a washout somewhere down into here. This is a measured move. It's a pivot high, more or less, an area in the market. We'll see if it can hold up here and start to put in a higher high going forward. But overall, it's under pressure today. We'll see if it can get some traction. It's sandwiched between the 20-day and the 5-day. And short-term bias here. It is oversold, still in an uptrend. It's had a really nice impulse move up, but the last 4 bars here do look bearish, so we could see some more downward pressure, and maybe it's going to carve out a little W bottom or something more significant over here before it starts to rally going forward. Taking a look over at the dollar. Here's the dollar index chart from FinViz. More or less, the dollar was actually trading much higher here about 20 minutes ago, 10 minutes ago. It's pulling back a bit, but overall dollar moving up. We are expecting it to continue to rally using Fibonacci extension. I don't have it on this chart, but more or less we've got the move up, we got the pullback. The second half of that move will be somewhere up around this 97 and change right near these previous highs. So if the dollar continues to move up, we're going to see the metals and commodities be under pressure for a little bit longer. And the big question here is, if we draw a line across these highs, you can see today is a potential breakout from this bullish kind of correction in the market. This nice 3-wave A, B, C. It was a perfect Fibonacci measured move. Now we've got a potential Fibonacci measured move for a breakout to the upside, and it could form a base and continue to move higher. The overall trend for the dollar is to the upside. If you look at the weekly chart, this is just one of these pullbacks, these more significant pullbacks before it potentially continues to go up to this $100 mark. And that is a really significant level on the chart going way back in time here. It's acted as resistance, acted as support, and then broke below it. And we could easily see it move back up and create that multi-week or multi-month pause in precious metals before they break out. Let's take a look over at natural gas, up 2%. It did hold above this 220 area, 224 area, which is a support zone. It's starting to pop today and move higher. Overall, it's starting to get above the 20-day moving average, this pink line here. So it is starting to look more bullish with an upward bias, and we may end up looking to get long again if it has a little consolidation or pullback. More or less, the momentum technically is still to the downside. If we look at the trend analysis chart, more or less, it ended up having a pop. We just missed our target in pre-market. These red shaded areas actually are a short sell signal on the momentum, and the market's pulled back and it's stuck under the 20-day so far. Today it's going to pop. It's trading up here, so we're going to start to see this shift to the upside. We're very close to natural gas momentum and everything shifting to the upside for a potential upside trend trade signal. So overall, starting to look pretty good. But still early in the phase. We were hoping to get in real early for a knee-jerk reaction higher, but instead it's putting in a more or less a rally. It's got this consolidation starting to break out. Measured move will be somewhere probably up to this 245, 240 area. It'll probably get stuck under some resistance here, but there is an upward bias still. But again, it's still stuck in a negative trend. So pops are being sold into, which this pop was sold into with a sharp pullback. So we'll see how that holds up. Looking over at silver, just jumping back to a precious metal, you can see the market has gone from short-term oversold zones where it has its quick momentum pop and then pulls back and it's popped again. And now we got a downward bias. Overall, the trend here is to the upside. We've had a nice pop, pull back, another pull rally. Got a nice bull flag forming, the 20-day moving average. It's getting back down to this lower area where it should try to find some support. But overall, still selling. Where is it now? It's at 15, 18. So it's trading somewhere down about here, which happens to be where we've seen previous support in the past, where it gets oversold. And we could end up seeing another oversold level in silver today when it opens up. And you can see obviously the cycles to the downside, most likely going to curve back up. But keep in mind, as price starts to chop around more, it usually takes more and more for an oversold level to take place. So the oversold territory may be a break of these lows. We'll have to see where the analysis is this morning. It could be much lower into this zone to anticipate increased volatility going forward. Anyways, that's really it for this morning, and I'll talk to you in a little bit. Bye bye.